everybody, and thank you for watching the Lifescience Show. I'm your host, Tom White. Well, it was a short week this week with only 4 days of trading because of the holiday for Memorial Day weekend, and wow, this week couldn't end soon enough. In fact, the month of May couldn't end soon enough, especially for those folks here in Colorado who had their Rockies go 8 wins and 20 losses after starting the best season that they've ever had. Anyway, the market's not looking good at all, and we're going to take a look at that here in just a bit, but first we look at 3 major principles. And we always start off with these 3 major principles. The US dollar and commodities, they move in the opposite direction, and we're going to see that in a bit. And number 2, the commodities and interest rates, they move in the same direction. And number 3, high interest rates are bearish for stocks. And so we'll take a look at the US dollar. And as we take a look at the US dollar, the daily chart down below, 0.1 shows stochastics are oversold, and they're looking like they're starting to turn bullish. We gave it a yellow mark, a little caution here. And 0.2 above that. We got a little confirmation here with those MACDs as the black line crossed over the red, and the histogram bars are continuing lower, so we gave that one a red mark. Up top, relative strength index, 0.3. It's declining, and it's got a trend now, so we gave that one a red mark too. And over on the weekly chart, down below 0.1 the stochastics, we're getting another sell signal here, but it's minor, so we gave it a yellow mark. And above that, 0.2 shows where the MACDs, they're still undecided where they're going. They look like they're a little positive here, but no clear direction. Histogram bars are flat too, so we gave this one a yellow mark. Up top, relative strength indexes bouncing a little bit from the top, gave this one a yellow mark too. And so summing up the US dollar, we analyzed the daily charts and the weekly charts. Over on the daily charts, stochastics were neutrals, we gave them a yellow mark. Over on the MACDs and relative strength though, they were negative, so we gave those red marks. And the weekly charts, stochastics, the MACDs and relative strength index, they were all neutral, we gave them all yellow marks. And for a total, we got 2 red marks for the US dollar, 4 yellow marks, and 0 green marks. And we'll take a look now at the commodities represented by the CRB Index. And a look at the daily chart of the commodities. Down below 0.1 shows we already got the stochastics. They're a bit overbought and they're giving a bearish signal. Give it a yellow mark for a little caution. Above that, 0.2 shows that the MACDs, they're still extending, but the histogram bars are flattening, so we gave that one a yellow mark. Up top, relative strength index. Looks like it's leveling off a bit here. Gave it a yellow mark too. And a look now at the weekly chart. Down below 0.1 stochastics are oversold, and we get a bullish signal here, and we gave this one a green mark. And above that, 0.2 shows where the MACDs look like they're recovering, and the histogram bars are flattening and look like they may start to rise soon. Gave that one a yellow mark. And up top, 0.3 shows where we got a bounce in the relative strength index. We gave that one a yellow mark too. And summing up the commodities, we analyzed the daily charts and the weekly charts. Over on the daily charts, the stochastics, the MACDs, and the relative strength index, they were all neutral, and we gave them a yellow mark. Over on the weekly chart, got a turn in the stochastics, they look positive, and histogram bars and MACDs, they were looking neutral, as well as the relative strength index. For a total, we got 0 red marks, 5 yellow marks, and 1 green mark for the commodities. And we'll take a look now at the 10-year Treasury yield. And on the daily chart of the 10-year Treasury yield, down below, 0.1 shows we got the stochastics. I had a bullish signal here, and it looks like they're starting to level off a bit, though. So we give it a yellow mark. We want to see a better return on that. And above that, 0.2 shows with the MACDs. They're still going down, but the histogram bars, they're flattening out, so we gave that one a yellow mark. Up top, 0.3, relative strength index. Trend is still down. Looks like we got a little support, though, so we gave this one a yellow mark. And a look at the weekly charts. Down below, 0.1 stochastics are looking like they're getting ready to cross, but they haven't done so yet. Gave it a yellow mark. 0.2. Got the MACDs. They're still declining, and the histogram bars are dropping too, so we gave this one a red mark. Up top, relative strength index is still in decline too, so we gave this one a red mark. Got a little support, though, there at the 30 mark, which would really be about 3% for interest rates. Looks like we may get a little bit of a bounce here. And so, summing up 10-year Treasury yield, we analyzed daily chart and the weekly chart. On the daily chart, stochastics, the MACDs, and relative strength index are all neutral, so we gave them a yellow mark. On the weekly chart, stochastics were neutral, gave them a yellow mark, but the MACDs and relative strength index were negative, gave those a red mark. For a total, we got 2 red marks, 4 yellow marks, and 0 green marks. Remember, we're coming toward the end of QE2 here, and the Fed is going to stop buying these treasuries, and that should drive interest rates a bit higher. And we'll take a look now at the Dow Jones Industrial Average. And a look now at the Dow Jones Industrial Average daily chart down below point 0.1, the stochastics. We can see we're continuing in decline. Got a bearish signal, gave it a red mark. And above that, point 0.2 shows where the MACDs, they're showing no signs of recovery, and the histogram bars are continuing their fall. Gave that one a red mark too. Up top, relative strength index is still declining, so we gave that one a red mark. We do have a little support there, just above 12,000 there, and wouldn't be surprised to see if we catch a short-term bounce on that, but things are still not looking good for the Dow Jones Industrial Average. Let's take a look at the weekly chart. And on the weekly chart, down below point 0.1 shows where we could be in a start of something real bad here, as the stochastics look like they're ready to decline significantly. We gave this one a red mark. And above that, point 0.2 shows we got confirmation of that decline where the MACDs have crossed. Black line crossed over the red, and the histogram bars, they're declining too, and they're in negative territory. We gave this one a red mark. And up top, relative strength index, we're failing, so we're falling down a little lower too, so we gave this one a red mark. Got a little support here, just above 11,000. I think that's where we're going to see. Looks like we're at the start of something real bad for the summer here. And so summing up the Dow Jones Industrial Average, things are not looking good at all. We analyzed the daily chart and weekly chart, and we found the stochastics, the MACDs, and the relative strength index were all negative on both charts. We had a total of 6 red marks, 0 yellow marks, and 0 green marks. Looks like we're in the start of something very big here with the Dow Jones Industrial Average moving into the summer. I'd expect further declines. And so we've been coming up with scores for the US dollar, the commodities, the 10-year Treasury yield, and Dow Jones Industrial Average, looking for where the strengths are and where the weaknesses lie. We did that by analyzing the number of positives versus the number of negatives and coming to a conclusion that way. And this week, in first place, we had the commodities, had only 1 green mark, we had 5 yellow marks and 0 red marks. And coming in second place, we had a tie again with the 10-year Treasury yield and US dollar. We had 2 red marks, 4 yellow marks, 0 green marks. And the Dow Jones Industrial Average is just not looking good at all. We had 6 red marks, 0 yellow marks, and 0 green marks. I'd expect further declines in the Dow Jones Industrial Average moving ahead. Looks to me like some money is going to flow out of the stocks and bypass the Treasuries and probably into the commodities. Look for gold and silver to do much better this week. And the US dollar is continuing to decline too, so it looks like the commodities are where you want to be. And we'll take a look now at our market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the bearish territory in the left column as possible. And this week, first place, we have the commodities caught right up there in the neutral territory, but moving toward the bullish area. And below that, we have the 10-year Treasury yield. Looks like the interest rates are following the commodities. They're going to start to move a little higher here as the QE2 comes to an end. US dollar, I expect to see further declines though. I expect that to move into the bearish territory as we move into this week. And in last place, we had the Dow Jones Industrial Average looking real bearish here, as I said earlier. I think we're in the start of something bigger here and declines in the market. Caution is advised. Now at our IBD 50 holdings, going into this week, we had Hansen Natural, 23 shares, starting the week at $70.89. And Tempur Pedic's been performing real well. We got 46 shares of that stock, $64.77 starting out the week there. And Edwards Lifesciences, $88.08. And Polypore International survived the portfolio last week, starting out the week here at $68.05. And it's Dollar Tree. We picked up 33 shares of that, in addition to the portfolio. Starting the week here at $63.22, carrying cash of $196.83. One of these stocks, the worst performer, is about to get sold. Let's see how we did. And our number 1 performer this week, in first place, for the second week in a row, it's Hansen Natural. And opening the week at $70.89 and closing the week up at $72.78. Had a gain in the portfolio of $43.47. Good for first place, and let's take a look at the chart. And on the chart of Hansen Natural, down below 0.1, the stochastics looking a little tired here. They're in overbought territory and looking a little bearish. Gave it a yellow mark. And above that, 0.2 shows MACDs are still going higher. And the histogram bars have flattened, though, and looks like it even declined. So we gave that one a yellow mark, too. Up top, 0.3 shows we got the relative strength index still looking bullish and climbing, so we gave that part a green mark. And our number 2 performer this week, it's Edwards Lifesciences. And opening the week at $88.08, we closed the week at $86.44. Got a loss of $39.36, but it was a tough week. Let's take a look at the chart. And the chart of Edwards Lifesciences is not looking good. Down below, 0.1 shows got a bearish signal on the stochastics. They continue in decline. Give it a red mark. And 0.2 shows we got the MACDs confirming those moving of stochastics. And the histogram bars are continuing to decline too, so gave that one a red mark. 0.3 up top. Relative strength index is starting to decline and making a trend. Gave this one a red mark too. It's not looking good for Edwards Lifesciences. And our number 3 performer this week, it's Dollar Tree. And it's a new addition to the portfolio. Dollar Tree opening the week at $63.22 and closing at $61.64. Got a loss of $52.14. Don't like that much, but let's take a look at the chart. And the chart of Dollar Tree down below, 0.1 shows stochastics, got a bearish signal, and they're looking like they're ready for a ride. Gave it a red mark. 0.2 shows confirmation of that. We got the MACDs, black line crossing over the red, histogram bars moving in the bearish territory and declining. Gave it a red mark. Up top, relative strength index, it's in decline. Gave this one a red mark too. And that only leaves room for one more stock in the portfolio. One of the stocks is going to remain. The other is going to get sold. And the first stock up, it's Tempur Pedic for the first time. Our number 1 performer since we started. And it's up against Polypore International. Finding themselves here once again. Coming in number 4. And remaining in the portfolio, it's Polypore International. And Polypore does it again, opening the week at $68.05 and closing the week at $63.06. At a big loss of $199.60. Don't like that at all, but it's going to be good enough for 4th place. Let's take a look at the chart. And the chart's showing damage down below 0.1 stochastics, so they're continuing down lower. Gave it a red mark. And 0.2 MACDs show no improvement. Histogram bars, they just continue to drop lower. Gave it a red mark. And up top, 0.3 the relative strength index. Looks like everything else, it's in decline. Gave it a red mark. And so Tempur Pedic is out of here. And opening the week here at $64.77 and closing at $59.84. Had another big loss, $226.78. Been one heck of a performer, so we've made money, but hey, it's out of here as its worst performer. Let's take a look at the chart. And the chart of Tempur Pedic shows the damage down below. The stochastics are negative, gave it a red mark. And 0.2, the MACDs, they've been bearish here. And the histogram bars are dropping too, gave it a red mark. Up top, relative strength index declining sharply, gave it a red mark too. Doesn't look good for Tempur Pedic. Glad to take the profit. And so our total performance from this week, we got Hansen Natural, 23 shares of that stock, the only stock making money this week. Got a $43.47 gain there. Edwards Lifesciences came in 2nd place with a $39.36 loss. And Dollar Tree, the new addition to the portfolio, lost us $52.14. Polypore International survives the portfolio yet again, knocking out Tempur Pedic, our number 1 performer since we started. Had a loss though, $199.60. And Tempur Pedic, hey, it's out of here. Lost $226.68 this week, but still had one heck of a profit since we started. We're carrying cash of $196.83. And so we get a new stock in the portfolio this week. This week, our new position is cash. And so what we'll do is a little different here. We're going to sell everything in this portfolio and go in 100% cash. So next week we're going to have a total of $11,257.12. We're still going to track this portfolio and sell the worst performing stock, even though we're going to be in cash. And we're going to pick 2 new stocks for the portfolio. And we're going to use all this cash to buy back the other 3 performing stocks here. Hopefully we're going to buy more shares of them because the cash will be worth more than the stock, as I think we're heading lower in just about every position here. So we're going to go ahead and take the $11,257.12 in cash, and we're going to run with this profit here. So we're up 12.5% this year, and I think the market's about to get clocked. Now, you know, these stocks have still got to perform, or else they're out.